be here and talk to you guys. And thank you for those of you who submitted questions beforehand. I like to see what's really on your minds and try and actually address what you want to talk about. So that's what I'm going to attempt to do today. I think little bored you with my background already, so I won't bore you any further. Suffice to say that the first 12 years of my career was I was working at scale in sales leadership. Then I started companies and last 4 years, and that was for about 15 years. Now I'm a fractional sales leader for the last 4 years or so. And I wanted to give you guys a start bearing gifts. If you guys go to my website, boltt.io, I'm going to give you an offer code for free access to my course, which will go into a lot more depth about what we're going to talk about here today. In case you guys want more than you're going to get here, just go to bolt.io, click on the startups course, use offer code AOA2024 for free access. All right. Okay. Why is this topic important? Let's get right into it.
Late here, the fact that there should be three.
I think Joanna, somebody's not muted. Can somebody mute all? Great. Thank you. The top two reasons for startup failures, if you combine them, that accounts for 73% of startup failures. No market need, and they ran out of cash. Now, these are two failures of market side understanding, right? You run out of cash because people don't want to fund something that doesn't have enough traction typically. And so these are two things where, and of course, so sales, getting money from investors, getting customers, having product market fit are all market side activities, right? And so Lowell sort of touched on this. I think this is a great point he made, which is more sales means more cash, which means higher valuation, which means less funding is needed and less dilution. So sales really does, as they like to say, solve all problems. Why is startup selling even harder than regular selling? And by selling, I mean all forms of getting customers. Well, I'm sure you already know why. You guys are sitting in the hot seat by running companies, but it sounds sort of like this to a customer. Hi, you've never heard of my company. I'm in a category that doesn't yet exist in your mind, and I'm solving a problem you may not think you have. Our product is confusing, and if you buy it, statistically speaking, we're likely to be out of business by the time you need support. Are you ready to sign with us? That's what it can sound like. And so understanding how to get revenue and do it well is especially important in our startup, environment. Let me just see. It looks like there was yes. Srinivas, you were asking if you can get the presentation. Yeah, made a good presentation. Make it available, and this recording, I believe, will also be available. So let's talk about the 4 sales that you need to make with anyone. Why should I change at all? Why should I change? So this is a potential customer of yours that's talking to you saying, why should I change at all? If I do change, why should I buy this general category that you're talking about? And if I do buy the general category, why should I buy from you as opposed to any competitors you may have? And then what's the urgency? Why do I need to do this right now? The old, vitamin versus Advil argument, right? Why is this urgent? These are the 4 sales, and you need to craft really good answers to these. So, and then those should be imbued throughout everything that you do, whether it's business development, marketing, sales, anything that you do. These should be imbued into all the things that you do. So let's talk about how to get early customers. And some of you may be dealing with this particular challenge right now. So the first and most important thing is to define, what does my ideal customer look like, right? Some people, like on the early side, we might call this a beachhead market, but who's the first wave of people that we want to sell to, right? And by people, I mean also companies, whether it's B2C, B2B. Now, if you don't know what the exact definition of this ideal customer is, that's okay. But we do want to try and get to that as soon as we can. So if you don't know what it is, then it probably will be more broad. All right. And then within that broader market that you need to hopefully narrow down fairly soon, you might find that you have a hypothesis about where, who needs this the most. Somebody just, if you could mute. You might have a hypothesis about who needs your product the most. And then, you could certainly test that part of the market. But at some point, we want to start looking at customers as they're coming in and saying, what do these customers have in common? Could we start to construct an ideal customer profile? So to get early customers, one of the ways that I think a lot of people don't jump on right away is if you connect to everybody you know on LinkedIn. This is especially true if you're in an incubator or you're accelerator of some kind. Connect to all your cohorts, all the people in your cohort, all the investors in your community. That dramatically expands the number of second connections that you're going to have. What's the beauty of second connections? You can ask for intros. Now, people are in the habit of doing this a little bit more, I think, when they're looking for investors, but maybe not so much in the habit as much when they're looking for customers. But perhaps we should be in the habit of saying, hey, can we get introductions to potential customers? A warm introduction is a beautiful thing, whether you're looking for investors or customers. And, obviously you may have to revisit product market fit issues several times during the early stage, right? And that will determine how successful we are getting customers, obviously. So I'm going to talk about four very broad methods of getting customers. One or more of these may be appropriate for you, and some of them may be totally inappropriate for you. The first one I'll talk about is product-led growth, and the others that I'll talk about are business development, marketing, and sales. So product-led growth, why would we even consider this? Well, it's very, very efficient way to get customers if it makes sense for your business. It works generally a little bit better if the ACV is low, like things like Slack, Trello. But if you're selling a major enterprise software, it's probably a really bad fit. High ACV, high touch, like ERP SaaS. And the kinds of things that you would want to think about if you were going to try and orchestrate product-led growth would be, build a really outstanding customer experience. Things like build an outstanding customer experience, add a frictionless entry point to drive acquisition, the marketing and sales side. You want to create flow, which accelerates time to value, which would be on the engineering side. Add components to weed out prospects who are a bad fit, more of a sales function. Add a feature behind a paywall to drive expansion, like growth and expansion. That would be a sales function. And add other valuable integrations to boost retention, and so on. Also add coaching to boost, success, like customer success. So those are just some general ideas. You can go to, I think, productledgrowth.org. If you Google it, there's an organization that puts out a lot of really good information about PLG. Let's see, there's a question that came in. Are there any previous meetings that were recorded? I'm not sure what that means, but I don't have an answer to that, sorry. Let's go to the next one, which is business development. What is business development? Business development is the idea that rather than putting an enormous amount of effort into doing our own marketing and sales, maybe we can partner with a company, sometimes we call this a channel partner, and gain access to the market that way. So why would we consider doing this? Loyalty partners can be more efficient, i.e. lower CAC, and it can increase revenue velocity. So let's talk about some pros and cons. You can certainly increase revenue much faster, gain access to markets that might be difficult any other way. It helps you sometimes gain trust a lot faster with your market that would otherwise take significant time, resources, et cetera, to generate. You could massively increase the size of your sales force depending on the partner that you have. And you get access to additional monetary investment and resources. Usually a good channel partner is much bigger than you. Some cons would be, brand risk, other partnership related risks. You may be saddled with exclusivity or semi-exclusivity. That's not real attractive. You may have to deal with margin compression, or other sorts of what we call channel conflicts, and so on. So let's talk real briefly about marketing. Marketing, as you see in my little picture here, the big funnel at the top is marketing. This much smaller funnel at the bottom is sales. So marketing is the top of the funnel. It's usually much bigger. It gets you leads that eventually flow down to either an more autonomous form of growth like product-led growth or a sales funnel. And so we talked about creating your ideal customer profile, but that would be, let's say you do B2B. An ICP would include the kind of company that you want to target. And then within that company, what kind of people do you want to target? Like, what are their titles? What's their psychographic, what's the psychology of that person, and so on. Marketing concerns itself with, positioning your offerings and in your materials. And then you want to try and attract your ICP to you. Okay, anything else in the chat? Okay, got it. I think those are answered. So in positioning your offering, you want to clearly articulate the pain point that you solve. Answer the 4 questions, in other words, that I talked about earlier, right? Why change? Why should I change? And so on. You want to marketing concerns itself with differentiating from the alternatives. And to attract your ICP, your ideal customer profile, to you, how do you do that? So you could leverage referrals, case studies, testimonials. Target, think about targeting your target prospect where they hang out online. Create compelling content. Outbound, what they call sometimes account-based marketing. It just means highly targeted outbound efforts. Outbound meaning, targeting them on LinkedIn, email, where you're actually reaching out to them. You can build what we call email nurturing cadences, which is a series of 8-10 emails that go in succession. It's sort of a pre-planned sequence of emails that slowly warm up the prospect. Remarketing. If you don't know what remarketing is, you can look it up. I'll give you a quick definition, which is people that come to your website. You can actually keep targeting those exact people with ads after they leave your site. And it's a really it's a nice, efficient way to do ads because you're targeting a very specific group, those that have actually visited your website. PPC, pay-per-click marketing, pay-per-click advertising, other forms of ad marketing. Anytime we're talking about marketing, one of the things I think is really, really critical is to always be A/B testing. Like if you say, this is what our homepage should look like. Great. Maybe we should have 2 versions of the homepage, and we make it so that people will randomly show up to one of the 2 versions of your homepage. And then let's see which one actually drives better conversion, right? Something else in the chat. Let me just see if that's a... did I explain ABM? Yeah. Types of marketing. Okay, so ABM is it stands for account-based marketing. It just means a highly targeted form of marketing. In other words, as opposed to pay-per-click ads, it's a little bit hard to control who's going to see those. I mean, depending on where you put them. You can do a pay-per-click campaign in a more targeted way on some platforms than others, depending on what methods it allows you to do. And but email, account-based marketing concerns itself with, let's say you're doing B2B. You're actually going and you're curating a list of your ideal customer profile candidates. Like, this is our ideal customer profile. What are a bunch of companies that fit this really, really closely? And then who are the people at those companies? Now I'm going to do specific campaigns to target those people. That's what we mean by account-based marketing. How do you do it? What's a step-by-step process? So that's kind of what I'm saying. So a campaign would look like, after you create the list of targets, then you write, let's say, an 8 or 10 email sequence that you want those people to receive. You go and you get their email addresses from data sources like ZoomInfo or one of them, and then you load them into a software program like an outbound software thing like outreach.io that you can actually load your email addresses into, load your 8 or 10 email sequence into, and then let it autonomously run and send those emails to those prospects. I hope that answers it, but we can always talk more about it if you want to. What's different about ABM? It's highly targeted. I mean, so like for example, contrasting it with pay-per-click, you may not be able to target exactly the way you want, depending on which platform you're using. But if you're doing an account-based marketing program, you're saying, no, I only want to target these specific companies and these specific people at the companies. You could do that to some extent on pay-per-click, but not always. Obviously, if you're in B2C, you may have more of an opportunity to tap things like virality. How can we do things that can encourage some viral behavior to spread our message? And then as you find what works, a lot of marketing is about testing different methods and seeing what works for what you're exactly selling. There's a really good book that goes into a lot more detail about this called Traction by Justin Mares, and he had a co-author. But as you start to hone in on what works for you, then you can actually hire those kinds of marketers. Like, let's say pay-per-click is doing really well for you, then don't just hire a general marketer, hire a pay-per-click expert if that's the method that works really well. Let's see if there was another question. Will the email say something different? I'm going to actually pause there and move on, and we can come back to this if we have time. I just want to make sure we have time for all the stuff that we had to cover. I do want to talk about the fourth and last major category, which is sales. And so the first question is, can you afford salespeople? This is a very, very expensive customer acquisition method. Now, why do you care about the cost? Obviously, you care, but there's a particular metric that you'll hear some investors talk about, which is an important one: lifetime value over customer acquisition costs. Right? That's an important ratio, LTV over CAC. And so that means, what's the lifetime value of this customer? You divide it by the customer acquisition cost, and if I have very high customer acquisition cost, that hurts that ratio. And it's a very important ratio that people look at. So, so it's looked at in various ways in the investment process. And so when sometimes people rather indiscriminately just start adding salespeople, and all I'm saying is, sure, add salespeople if it makes sense for you. You actually can't afford salespeople if your average contract value, your ACV, is less than $3,000 per year. Then the unit economics don't work out very well. So that is a question you have to ask yourself, and it is a very expensive acquisition method. So you just have to be cautious when you do it, and make sure that if you do it, you're adding salespeople and you're growing as efficiently as you can. And that which takes me on the next point about you're going to want to automate and optimize lead flow. Leads coming in and getting to meetings, that has to be very efficient, because the more time that's wasted in there, the worse your close ratio is going to be. And that hurts your customer acquisition costs, your revenue velocity, and things like that. And then, of course, the sales process is fundamentally designed to take prospects in a more one-on-one situation, where marketing is more one-to-many. It's a more one-on-one situation, and then take those deals and close them in as few meetings as possible, like as short a sales cycle as possible, which one of your questions was related to sales cycle length and how to shorten that. So obviously this is an important component of that. All right, so let's talk about, I want to, now just that we've done some intro, I actually want to get right to your questions that you've asked ahead of time. This is a great question and a very important topic. How does one first set prices and then evolve them as the offer grows? Okay, so I've heard some really great answers to this over the years, and I'm going to share with you some of my favorite thoughts on pricing. So part of the issue is, what is the value of the problem that you're solving? What is the value of the solution? Well, it's hard to know that unless you really understand your target customer. Hopefully you've done a lot of interviews. You've asked them questions like, what is the problem? What is the problem they're experiencing? You've observed their workflow. What is the cost of this problem? What are the downstream consequences? What are the cost of those downstream consequences? You quantify the totality of that problem. That helps you understand what the value is in solving it. That can help you understand pricing. That sort of sets the upper limit, and you can say, well, if I'm creating this much value and I charge them, let's say 1/10 or 1/5 of that, then I can make a credible claim about a 5 or 10x ROI on my solution, right? So this is how you start to understand pricing, and also how you how you help illustrate the ROI for them. You could ask people, what do you think others might pay for this? You can't really ask people what they would pay because they're not really good at guessing what they would pay. Sometimes you could just name a price and gauge the reaction. You start talking about pricing. I will do this even in a sales call because some of my customers are so early stage that they don't really know how their pricing is going to sit with people. And so I'm doing discovery and selling at the same time. So I will name a price. I'll say, based on the, few things you've shared with me, this is kind of where we would be. And how's that fit into your budget? And I start gauging the reaction. And then I say, okay, well, maybe there's things we can do during this rest of the sales call I can do to figure out how to tweak that price if it needs to be tweaked. You could certainly look at nearby competitors because their alternatives are relevant. Those are relevant. Another person had a really good suggestion about asking customers, would you pay more or less for my solution than you pay for, let's say, Slack? You peg something that they're using or is something that's commonly used, and you say, would you pay more or less? Is there more or less value in what I'm offering? So these are ways that you can sort of eventually back yourself into a price that makes sense. I listened to this podcast on, I think it was the Acquired podcast, and they had this amazing interview with somebody who does a very detailed process to find price. And I think if I wrote them down correctly, it boiled down to 4 questions. Like, what would you say is way too expensive? And what's still, a little bit out of, it's getting expensive, but it's still a little bit out of range. What do you think's a good deal? And what would be so cheap that you'd actually question the quality? And again, you're trying to draw a circle around the general area where you want to be and then slowly get more specific. All right. So those are just a few thoughts on how I think about pricing and what I found to be helpful. The next question was, what strategies can you use to find potential customers? And so I think I answered this one earlier with the 4 general categories, why you might use one over the other, whether it's business development, product-led growth, and so on. And then I mentioned the book by Traction by Justin Mares. The next question was, among angel investors, what percentage will want to look at projects in, say, Africa, where the clean energy climate opportunity saves millions of lives, prevents gigatons of carbon emissions, still makes 30% plus return on investment over 50-year life? Not many seem willing to listen, let alone evaluate. Well, I feel the pain of this question because any of us really that have pitched and you got no after no after no after no, it can be very frustrating. And I'm sorry that you're going through that. And I've certainly been there. And I don't have a super great answer, I think, but I would say a couple of things. One is there are certainly investors that are specific to Africa. And generally speaking, as Lowell pointed out to me in email, investing does tend to be regional, unless there's a fund that this has a very particular specific interest in Africa or in your particular category. I just want to get, I don't know if Lowell's got his ears on here, but Lowell, if you want to chime in with anything additional, those were just a couple of thoughts that you and I talked about.
Yeah, I think that's awfully specific. This is more about like fundraising in Africa. So that probably is a different topic than we're talking about today. Yeah.
It is. Yeah, it is. I just figured hopefully we give them a little bit of value there. So the next question was, how do you maximize returns out of B2B partnerships and referral funnels? Digital leads seem to be converting at a far lower rate. Is there anything that can be done to improve digital conversion outside of education and excellent client experience? So what I took this to mean was that we're talking about a partnership, like a channel partner. And so those leads are maybe not as good as the other leads that you're getting. The leads that from this channel partner are not as good. So what I like to ask myself if I'm confronted with this are, how are these leads different? Obviously they're not as good, but how are they different? Like, are these much smaller companies than we like dealing with? Are they the wrong industries? What is it that they have in common in their badness, right? In their badness of fit. And so then we can ask ourselves, how far are they away from our ideal customer profile? Because you really are trying to optimize for your ideal customer profile. So can you maybe automatically qualify these leads or disqualify these leads as they come in? Is there a way to do that in some sort of automated way? Maybe that saves you time. Is this maybe the wrong kind of partnership? How can you how can you educate the partner on, this is what I'm looking for, and this is what you're giving me, and really make that clear to them? Is there maybe not enough incentive for this partner? Is another question I would have. And maybe it's just a matter of, maybe you need other partners, or maybe you need to just use other growth methods. If none of these other ideas I've been sharing would yield improvements, then maybe we just need to think about other growth methods. But those are things that I would try to do with the partner first. How to find investors interested in slower growth manufacturing startups. Obviously, another investor question, but the answer is going to be similar. One is, you can look at certainly investors that are focused on manufacturing, right? That's an obvious one. You can look at manufacturing companies that have received VC investment, that have received VC investment, and go look and who are their investors, and then approach those investors. You could certainly look at exited manufacturing founders and see if they are now angel investors. Lowell, do you want to pipe in with anything else, or should we move on? Sorry, I should have teed you up better. Anyway.
It's fumbling for the mute button. Yeah, no, I think that's good. Yeah. These are good questions, but they're more investing focused as opposed to kind of sales and marketing, revenue generation.
Yeah. Okay, so there was another question in the chat. Do potential investors care if you've shifted sales models? I would say, if I was an investor, I would say no. I think that any founder that's shifting sales models because they want better returns on their efforts and better return on the capital, those are smart founders. For example, start with a B2B direct sales to get initial wins, and then move to a channel partner model, shorten sales cycle. No, again, super smart to do that, I think. If you're trying to shorten sales cycle, accelerate revenue, great reasons. I wouldn't necessarily think of it as one or the other. These are not mutually exclusive. I mean, you can have multiple sales channels, and eventually you definitely want multiple sales types of channels. Another question in the chat: do you have best practices for how to integrate test marketing, landing pages, deposits, reservations into early product or offer development? All I would say really is about test marketing. Let's put it this way: the more you interview your target audience, the less test marketing you have to do. I mean, if you don't really have a good understanding of your audience, you're gonna have to do a hell of a lot of test marketing, right? So the more you understand, you can really narrow down, okay, these are the major pain points. We don't need to test market because the audience is telling us this is the issues, right? And then you should be testing, like, how do I present or message these, or how do I paint the picture? What colors do I use? What pictures that really get the message across? What call to action do I use? And that's really just in A/B testing. I don't know if that helps. What are common challenges that you see startups face that pull them away from being sales and revenue focused? That's a great question. Everything pulls them away. And I think being a founder, to me, is all about, can I stay focused on the the 3 or 4 things that really matter and back burner everything else? I mean, that's a real challenge. And so that comes down to a lot of factors. Like, number one, do you know what the 4 things are, 4 or 5 things that are most important? 2, do you have capable people around you that you can just learn to trust to do the things they need to do so that you could stay focused? And then there's just a matter of maybe putting time blocks in your day to stay focused on things that really matter, like obviously sales and revenue. Because this is something, just like in talking to investors, that has to be baked into founder schedules. great question. Like to hear more about how to run a successful blast marketing campaign. So right off the bat, the word blast concerns me, and I'll tell you why. Because there's too many sales and marketing professionals that are in the blast business. Sometimes we call this spray and pray, where they think of it as, I just have to blast my message to as many people as possible. And that A, is generally unsuccessful, very unsuccessful. B, it causes other orders of problems, right? So you have the domain damage. You could do a lot of damage to your domain by sending out email blast after email blast to a poorly qualified list that's not customized in any way. And now, of course, starting in February, Google's gotten much more strict about this. So if you're going to do some email marketing, you probably ought to have some alternate domains that you use and warm them up, and follow all the best practices there if you're going to do it. But certainly, I never would think of it as, I just want to blast my message out. What you want to do is you want to target your ideal customer profile. You ideally want to get inbound traffic rather than outbound. I mean, inbound is the thing you want to set up first and make sure you're able to attract your ideal customer profile. If you're going to target people in email, target in smaller batches. You want to customize the messages with really relevant case studies, and reach them over LinkedIn and email outreach. But yeah, you just want to think highly targeted message, customized. If you're not getting results, then you got to stop what you're doing and revisit. Like after every 50 or 100 emails, you got to stop and say, why am I not getting any response? I'm obviously not hitting the notes that I need to hit. And so rethink it, talk to your target market again, make sure that you're getting results, and don't just keep doing something that's not working. Let's move on. See more questions. Okay. Other questions from before. As a sales professional and COO, what advice would you give to others that would like to break into the COO role of a startup? Okay. So I see a couple of ways. One, start a company and perform. And if you start it with a partner and you want to be COO, that's what I did. He took the CEO role, I took the COO role, and we performed. That's one way you can be in a COO role. In other words, you can start in a bigger company, rise up through the ranks, and get and perform. Get good experience at highest levels as you can. That's another way to break in. Not a super complicated answer, but I think those are the best answers I could think of. How do you get a meeting with a major decision maker? So this is a great question. And my thinking on this has changed over the last 30 years, because it used to be that there was more of a monolithic decision maker that you would try and get to. And if you got to that monolithic, economic decision maker, you were golden. It's the way I think about it today is a little bit different because of the way things have changed. So in most companies, it's not a monolithic decision maker. It's almost always a buying unit or a decision unit, and that's a group of people. And it's at least 5 to 10 people in even in smaller companies, but in big companies it can be a much larger group than that even. So I wouldn't necessarily think of it just as trying to get to one particular person. I'm trying to get to one or more of those folks that are in the buying decision unit within a company. That's what I'm trying to get to. Once I get to them, I want to try and get as many of them on the next sales call as I can, and have as many of them on the call as possible, and then try to understand their needs and then meet as many of the needs as possible. Because if you end up meeting with just one person and you're not hitting the hot buttons of the other people, you don't know what their concerns are, then you're kind of shooting in the dark. But but again, to get to someone that you want to get to, you can ask for an intro, or it's what I was talking about earlier, craft the right message, customize the outreach, make sure you're hitting their hot buttons, use relevant case studies, include your Calendly link, on your LinkedIn, and any email outreach and any LinkedIn outreach. Don't make it a big mystery how they can book a meeting with you, right? you want to give them the easiest way to book in your calendar. And I say it and it sounds crazy obvious, and I can't tell you how many people that try to meet with me and don't give me their Calendly link. They're like, do you want to meet? And then I have to say yes. And then they have to say, okay, when do you want to meet? And then we go back and forth. That's why these Calendly type programs exist. Is there a standard way to determine reseller commission rates?
Hey, Sanjit.
Yeah.
Sorry, Lowell here. Hey, I was going to jump into one of the things I found on the backs of building two companies that was super useful for meeting decision makers were conferences. So if you've got industry conferences where, Sanjit talked earlier about finding the right profile, like the right company and the person with the right title. If you can find conferences where a high percentage of the attendees sort of self-select with that business profile, it's a great way to meet people.
100%.
Stand by coffee in the morning and just say, hi, what do you do? Ask them questions. At some point they'll say, what do you do? Sit at the breakfast table. There'll be usually eight tops. People will usually go around, introduce themselves. You can give your one-liner. You can ask other people what they do. If they look like a good prospect, give them a business card. I can promise you those people will take your call or respond to your email just from a simple introduction like that. But you can meet 20 or 30 people a day at a conference. So sorry to interject, but I want to jump in there.
No, that's a great point. Which is, yeah, I mean, if your prospects are going to be this conference, it's like, it's a gold mine. It's an absolute gold mine. Is there a standard way to determine reseller commission rates? So, they'll range from 5 to 50%, average 20, 30 from what I've, generally seen. I've been a reseller of a couple of things. So I've been on both sides, or I've certainly been on that side rather. So I would ask myself questions like, what will give them enough incentive to get the results that you're looking for? And, maybe what do competing offers pay them? You have to make sure you have enough incentive to get their attention. And then, of course, what do my margins support? Can I support that kind of payout, right? And then you have to make sure that it's of enough interest to them. Sometimes they're reselling, a number of things. You want to make sure that you're going to have enough of their attention. If they're carrying a big bag of, tricks, you want to be on the, you want to make sure that you're not just going to be at the bottom of the bag, in other words. All right. So another question. We have a category busting product. Awesome. First of all, at a high level, it sounds like a knowledge management tool, but that isn't the value. But we are very specialized in the pharma vertical. When we get new customers, we are very sticky because they love it. Awesome. But getting new customers can take a year plus. So mostly we grow through referrals and expansion. How can we accelerate this process? This is a good question, and I do run across this regularly. So by referrals, I assume you channel partners, what you have. By expansion, I assume you mean growing existing customer revenue, which is a great way to grow. So the problem, my understanding is net new customers is the main issue. So I'll ask this question, then I'll answer it since this is not super interactive yet. Hopefully we'll make this more interactive in a minute here. What drives velocity? What drives velocity is urgency. What drives urgency is you're hitting their hot button. If you're not hitting their hot button, then we can't expect there to be any urgency if we're not truly hitting their hot button right in the bullseye, right? And so that's what we need to do is make sure that we are hitting that hot button, and then we may have to talk to some customers and prospects to figure out what about our messaging is not driving enough urgency in the sales process, thereby creating this super long sales cycle. Can you improve incentives for referrals? That may get us more customers, which I just talked about, right? With the bag of tricks and not wanting to be at the bottom. Are there other ways to grow your revenue? We've talked about a number of methods. Are there other methods that you haven't tried? Is there other, can you do other business development type plays with other channel partners or resellers? Can you have more irons in the fire also? Which may depend on your average contract value, which types of things are available to you. I want to pause there and just kind of open it up. We have, maybe 10, 15 minutes left, but I certainly can cover more stuff, but I wanted to make sure that I answer any other questions that you guys may have. Any other questions for the chat, or just unmute and start asking?
Yeah, I guess so. This is it is a question, but it relates to the one, this category busting product and sort of driving urgency. I was curious, are you familiar at all with Skip Miller? Is the sales trainer. He's got a method about selling above and below the line. And it's something that I've found very helpful for driving urgency over the years. Just curious if you have any exposure to that.
I may have heard it called something else, but yeah, please share.
Yeah, well, I guess the overlap that I was thinking of is he talks a lot about, speaking executive language, right? And multiple different types of buyers in the buying unit. So below the line would be more of your classic user buyer. Above the line would be more of an executive buyer. But to get buy-in and really drive urgency, one thing that he talks about is time traveling with your prospects, right? And it's not just what's the problem right now, but what's happened over the last 6 months to cause you to consider a change, which then helps drive the, why change, why now, why us conversation. Because of course, if you can really understand what's happened over the last period of time and where they want to be after another period of time, right?
Yeah.
You can really understand the gap that you're filling and how much value you're bringing to the table there. So again, I think just getting into the executive mindset, and of course at startups, I think a lot of people have that mindset, but translating that conversation to your customers and prospects can really make your value proposition sticky at a very early stage.
Yeah, totally. I agree with that. Another thing I do, I think that was Aaron. Aaron, is with one of my customers that was selling to very large enterprises, I didn't have to wonder what those executives wanted. You know why? Because we were selling to very large enterprises. I would look at their annual reports. I would say, what are their key things that they want to accomplish? What are their key challenges and things they want to accomplish in the next 12 months? And I'd put it in a document, and I would start tagging our products that were relevant to things changes they wanted to make. So I don't have to wonder if they're a public company. I can just, but to your point, these are other ways. You mentioned some other good ways to try and find out. But and then, then our sales team knew exactly how to message the executives and be extremely relevant, because we would say, your CEO said this. This is how we can help you to do what your CEO's initiatives are. Right? Made a huge difference. And so that's another way. It's really still just as simple as figuring out what their hot button is. Any other questions? Yeah, I'll start answering one in the chat, which is, what methods would you recommend to use to quickly find market fit? Okay. I would say that if you don't know if you have product market fit, you probably just need to spend more time with your audience, right? If you are talking to your audience and you're not sure if they would be interested in actually buying your product, go ahead and ask for the sale. Say, can we have a purchase order? Would you like to buy this now? Here's an agreement. You can just simply ask for the sale, and then try and find out, if they say no, try and find out why. What is it that I would have to change in order for this to make a lot of sense for you, right? And those are the kinds of things you can do to really understand, because there's nothing that clarifies more than asking someone to buy. That will clarify where you stand real quick. Any other questions?
Hey, yeah, this is Aaron again. I was just wondering if can you talk a little bit about sort of the changing landscape of investment? I think the last couple of years, what people are looking for, in startups, and the things that make them sticky, help them extend their runway, have changed a little bit. So curious to get your perspective on that, and sort of what you see as being, obviously, other than kind of revenue, right? And being very sales focused. If you could talk a little bit about just other great things to focus on, and sort of what folks are looking for.
You were talking about from the investor perspective?
Correct.
Yeah, I don't, Lowell, I don't know if we want to spend time on that or if you want to give it a couple of thoughts.
Sorry, can you, I had a call come in. Can you, what was the
Oh,
question?
he was just saying, Aaron was just saying, he was interested in what are investors looking for now? How's that changed over time? Is that something we want to spend any time on, or do you want to give a couple thoughts on it?
Well, it's a really good question. I mean, I probably give more of a personal perspective. I think sometimes it depends on the industry that you're in. It depends when you're talking about angels or VC. I'll tell you, generally speaking, right now for VC private equity one, I mean, profitability is a big deal, even for small early stage companies or a path to profitability, so that you're not dependent on raising cash again without dying. And I think angels like to see. I know from my perspective, I like to see revenue growth. So even if it's early stage, if you can show that you've got traction and it's accelerating and it's sticky, that's important. So growth, retention, both gross retention and net retention. It depends on your ACVs, but you want to have, if you've got 80% gross retention, that's kind of a red flag because you're, the leaky boat, you're losing 20% a year. So, the goal is to get, ideally above 90% gross. Net retention, ideally, if you can get to 100% or above, that's pretty impressive. Some of the classic things, TAM, is the target market big enough so that if they take the risk and it's successful, will they make money? Customer concentration, if you've got one, even if you're at 5 million ARR, if you've got 3 million with one client, that can be a risk, right? Because if that one client goes away, it's a much smaller business. So those are probably the top 4 or 5 things that people look at. We could probably do an entire, in fact, that's actually one of the things we're going to talk about is investing and valuing companies. So we'll stay tuned. We'll do another session in the next few months on that. Yeah, it's a really good question. Honestly, some of the best questions I've seen today, actually, in these different sessions.
Yeah, and I also, I think I also, well, I've certainly heard that the later rounds are very hard to get, which just makes everything Lowell's saying seemingly that much more important.
They are, yeah. And we've got one that's coming up that talks about like revenue-based financing. So it's more like a loan tied to businesses that generate MRR. They'll loan you money based on certain metrics, which is non-dilutive, and you pay it back. So that's an alternative to like a Series B. But yeah, Series B, Series C is pretty tough. People are been pretty tight with their money over the last 18 months after spending profusely for the previous 2 or 3 years at sky-high valuations, and then they're trying to recover from that.
Any other questions?
I guess if I can, I have one more for you, Sanj, which would just be a little more detail, I suppose, around the planning versus doing side of this, right? Like identifying your ICP, building your cadences, doing the groundwork, identifying some things that you think are going to work, and then of course sort of the A/B of it all. But obviously, I think it's a fine line to walk between casting a wide net and being highly strategic. So I'd be curious to hear a little more of your perspective on that.
No, that's a really good point. I mean, you can only learn so much from talking to your audience, and then you do have to, start getting sales and getting customers. I'm surprised at how many people don't really take a really hard look at their clients that they've gotten. They say we want to get more customers. I'm like, well, tell me the customers you have now. Not because that we're only going to get customers like that forever. That's certainly not the case. But it's like, did we do the analytics that we can do to really understand why the early customers are buying, who they are, how they're different from the rest of the wide net that we could cast? And it does start to give us clues as to maybe where we should focus our efforts, because to me this is all about it's all a game of focus, because resources are limited. If we had all the money in the world, we'd just do TV. Everyone would do TV advertising to everybody. But because it's resources are so limited, that's why we use the data from our customers that we've received. And not only that, like have you actually talked to these customers and asked them why they bought? And it sounds almost silly, like, but I'm pretty sure they bought because of these general reasons. Yeah, but let's ask them. Let's ask them why they bought. What metrics did we move for them, right? You're going to do this anyway, hopefully, to get case studies that you can use for further outreach. And but to me, it's all about then using, well, if these are the customers we've gotten, and these, and we're going to get customers that are similar to them, and we get the case study from these guys, and we parlay that into outbound. Now the prospect is hearing about a success story that's similar to where they were at. The problem is where they're at, and they want the solution that you were able to deliver to this very similar company. Now that starts to drive the flywheel faster. And so it's kind of like parlaying the success from the bottom back up to the top of the funnel.
Yeah, I'm going to jump in there. I couldn't agree more with you, Sanj. I mean, I found that surveying your existing customers, like open-ended questions, is invaluable, because often your customers will talk about how your product solved a solution in a way that's sometimes just framed up differently. We think we know their industry, but when they live within it, sometimes they'll frame up the pain that it solved in a way that's subtly different, but then resonates with other potential clients, even though they might be saying the same thing. And we all know that if you're an expert in a domain somewhere and someone who's not, you can quickly tell when someone's not, because they'll say something slightly differently. So I think that's a fantastic way to truly understand, because at the end of the day, it often comes down to an emotion. It's like, well, since I implemented your product, like, I don't get bothered at night. We don't have these problems in the middle of the night where they're calling me to come fix it. It's like, okay, so and then you can lead with that. Are you getting woken up in the middle of the night because of X, Y, and Z? People can relate to that, and it's an active pain that they want to solve. Not, hey, my name is so-and-so, I'm from this company, and we do X, Y, and Z. They're waiting for you to get to the point. Yep.
Yeah. Yeah. So you might find, like Lil was saying, it completely changes the positioning that you may help change your positioning. And even if it's subtle, sometimes that makes all the difference. I try to use customers' own words and not my words.
Yeah.
It's really important to use their terminology and the way they see it. Yeah.
Yep. We should wrap up. We are on the hour. This has been great, Sanj. Thank you so much for joining.
Thanks, guys. Yeah, thanks for having me.
You're great at what you do and explain it well. Thank you for all the questions. Thank you, everyone, for your time.
Thanks, everyone.
And we got more to come.
All right. Cheers, guys.
Okay. Thanks. Bye.
Thank you.
Thanks, gentlemen.